You're joining in on the very last trading day of 2023. We're bidding adieu to what has been nothing short of a pretty extraordinary year gone by, at least when it comes to returns for the equity markets. A solid 20% plus on the Nifty 50. And although we may not have played exact catch up to our global peers, we've done quite well. In fact, we've outperformed some of the global markets quite significantly. And Nikunj, who would have thought the year has already flown by, and I don't think there's any complaints.
And one of the years where you don't want the purple patch to end. You would say, okay, 2023 has been nothing short of year of dreams. It's been an extraordinary year on all account. Normally and historically, you would say that one asset class does well, few asset classes, they remain flat, and few asset classes, they actually move the other way around. But this year, I guess it's just been a rising tide from NASDAQ to S&P, with the exception of China and few developed markets. It's been a great year for equity as an asset class. Then look at other asset classes. Within other asset classes, golds had a good year. Bond markets rallied in the second half of this year. Bitcoin hit a new high, so to speak. If you look at the list of asset classes which have given negative returns, actually there are very few asset classes which may have given you negative return. So it's been a year where you can actually say our tagline for the year-end programming, everyone has managed to beat the odds. 2023, rewind it to 1st of January 2023, nobody anticipated this kind of a rally in small cap stocks. Mid cap stocks were supposed to have a flat year and large cap stocks were supposed to outperform. The reverse has happened. PSU stocks, it's like the OMG year for PSU stocks. Anything which had a prefix and a suffix PSU, that space has got extraordinarily re-rated. It's been a warm year and a good year for IPO markets. So net, it's been a good year. It's been a year of wealth creation. It's been a year where the local crowd, in a sense, was calling the shots. It's been a year where we did not get very large flows by institutional investors, the global institutional investors into the cash market, yet we've done extraordinarily well. So I think this is a year to remember, and it's a year to remember for all the right things.
A year to remember, and yes, many good reasons to remember that. And one good reason has been the wealth creation that we have seen by the domestic participants, the fact that Nikunj was talking about, and it's further underscored by the kind of data you have for yourself. Of course, the number of investors had jumped up to 8 crores versus 7 crores that we had seen last year. The SIP inflows have been the one that have been just continuously gaining ground. So you have almost the 17,000 crore figure coming in as far as SIP is concerned. We started off the year with a number of around 13,000 odd crores, and since then we have just been building onto that number, and that flow, despite the cycles that we saw of the up and down, the belief that the DIIs or the retail participants had in the utility of SIP really came to the forefront this time around. So the number consistently went up, and we ended the year almost with 17,000 crore. Let's see what December throws up. Even the number of demat accounts, we started off when almost there were 10 crore people who had demat accounts, and by the end of the year it's 13.5 crores. So the year, Nikunj, has clearly belonged to the DIIs and to the retail participants in India.
It's a year where you frankly think about it, all you did that if you just participated and you buy few good stocks and you've made money like bandits. I don't think 2024 we would be in a repeat of this kind of a return.
Unless it was HDFC Bank. Unless it was HDFC Bank.
Yeah, I mean, few stocks don't make money, but in general, if you, as long, say 80% of the market has given you returns.
Yeah.
I think, and it'll be fair for me to say that actually more than 80% of the market, and I'm just, thinking aloud here, this is not a data I've looked at it. 75 to 80% of the market this year has easily given you double-digit returns.
Yeah, easily.
And I think that's an extraordinary feat for a year where you had a lot of things which are thrown at it.
Correct.
You started the year with this Adani fiasco. Then you had geopolitical crisis at the end of the year. Middle of the year, a lot of confusion and chaos as to where inflation is headed. You never knew that what central bankers were doing. FIs, they've been continuously selling the market down. Yet it's really been a year where you've emerged right at the top here. You can compare Indian markets with NASDAQ and say, okay, NASDAQ was the best performing market. There are a variety of factors why NASDAQ has done what it has done. But I think this is a year to remember. It's a year where India's market cap went to $4 trillion. It's a year where we've really cut out everything in terms of direct tax collection, in terms of the GST, in terms of how the Forex Reserve have gone. So it's a year of highs. It's a year of new highs. It's a year where you want to say and you just want to touch the wood and say, okay, touch wood. I hope this momentum continues. It's a year where you got markets just got everything what they wanted. Just think about it. I mean, you got the state election verdict, which was favorable. You got a hint from the Fed that interest rates have peaked out. Corporate India, in a sense, has been on a capex binge. Retail investors have been on a SIP, SIP commitment string, and then the Indian consumer, barring the rural consumer, the luxury spends, what we saw in terms of premiumization, just about everything what you want pretty much was there. I mean, like a templated year in terms of ticking all the boxes.
Yeah, but if you look at the inflows, the way it works in a computer, the inflow and the output, if you would have just looked at the inflows, you wouldn't have thought of this kind of output at all, because there was just so much happening. But despite all the odds, it was clearly a year that really stood out. But let's see whether Jan stands out or not.
I know we touched wood in 2023. Maybe we have to keep our fingers crossed in 2024 because only of the seasonality factor. And this is data that we've culled out over the last 10 years, how the month of January has performed. And unfortunately, in the last 10 years, 7 out of 10 times the index has wound up in the red. The mid caps as well, 6 out of 10, and ditto for the small cap index. So just looking at the last 5-year data, barring 2019, which was just a gain of about 0.5% in the month of Jan, it's been negative returns across the board. But Nikunj, even if we were to see that Jan seasonality play out, I don't think it would be that bad.
Yeah, see, I don't think, see, the expectations from this time's Jan actually are very high.
Yeah.
And that's simply because the general view is that, okay, FIs have come back and they are here to stay, and they will come back and they will come back, with big flows in the month of Jan, because that's the time typically the seasonality factor or the inflow factor would start. So I will not be surprised that the initial part of Jan actually would be strikingly different, purely looking at the positioning of the market. The positioning of the market is such that we are closing the year on new highs. FIs is just about come back in the month of December. There is an election, and this in a sense is a time when you actually would see large amount of allocation coming back to markets like India, largely because the Fed rate has also peaked out. Performance will always chase flows, and India is now becoming a market of choice, and it's a performing market, and typically at the beginning of the year you would actually see inflows. Now that's the market belief, and I don't think that belief in a sense would get challenged. Our view pretty much was that a Happy Diwali rally will extend itself to a Merry Christmas rally. I think it may just linger in there in terms of price action for next couple of days. Let's see how the earnings season moves. I think for me the testing time of the market really would be in the second week or the third week of Jan. That's the time flows and corporate commentary, in a sense, they need to be matched. So I think in the first couple of days of Jan, the market momentum should continue. But it's really in the second half of Jan, that's the time when earnings season and management commentary and flows and valuations, that template would be at play.